Hello and welcome again to another lesson here from Second Skies. My name is Chris Capri, I'm the founder here, and today we are going to be talking about the momentum indicator, one of my favorite indicators to trade markets. The momentum indicator is designed, it's very simple in usage. It's designed to measure the rate of change in closing prices for a currency pair or stock or commodity. It's often used to detect weakness or inherent strength in a pair and also signal us when potential reversal points are or when trends are going to begin. And its relatively simple in design nature also allows us or makes it easy for us to really understand how to use the momentum indicator. Taking a look at a chart here, we can see this little blue line here. This is the momentum indicator. It's measuring the rate of change in closing prices for a particular pair. And it also has a zero line right down the middle there. The basic ways to use momentum is that when you have high momentum readings, either severely to the upside or to the downside, that usually occurs when a trend is at its strongest. At that point, not only have the big money players come into a particular move, but also the speculators are no longer need to be convinced that this trend is for real, and they start piling in positions just to get into the trend. When you have lower readings or mid-range readings, those are often found at the start or beginning of a trend because it hasn't built up a massive amount of momentum to one side or the other to really dictate a particular trend or strength. Taking a look at the same chart here, we can see when the pair had really high momentum readings was when the trend was at its strongest here. This is the highest point of reading here and one of the sharpest angles in the momentum, and yet this also demonstrates how strong the pair was during this time, having some of the largest gains of this particular 900 to 1,000 pip up move here. Momentum during trending markets. This is key to understanding how to trade this pair during, or this indicator during trending markets. Momentum as a whole tends to stay above zero during an uptrend and below zero during a downtrend, especially when the trend is at least at the middle part of its maturity. Generally, you only want to take a signal from a momentum indicator when it is in line with the trend. Because it's a leading indicator, and how it really is a measure of price action or ahead of price action, you really need momentum to be in your favor to signify that the order flow is consistent with the direction of the trend you're trading. If momentum is going in the opposite direction in a trend, do not take the trade. The usual method, the most basic method, is to go long when momentum turns upwards below zero at least about a 30-degree angle, hopefully a 45-degree angle, or to go short when the momentum turns downward above zero and when it's turning at least a 30-degree down angle or a 45-degree down angle. Taking a look at an example of this here, we can see right here the trend, even though it began over here, momentum turned upward pretty sharply. This is over a 45-degree angle, suggesting that there is now strong momentum to the upside. And so it's below zero, it's turned upward here, and it's moving pretty consistently. This gives us some good clue that we're about to start a very big trend, and we ended up doing that. Some additional usage for using the momentum indicators, again, to repeat, it's a leading indicator, meaning most often it's ahead of price action. Therefore, price action is often like a shadow of momentum. And because it is very much like price action or a mirror of price action, you can treat momentum very much like you do price action. Therefore, you can draw trend lines on it, you can draw Fibonacci's on it, you can look for patterns in the indicator itself, head and shoulders, double tops, etc. Here's a great example of this here. So we have a very strong trend in the euro dollar here, yet we created a double top of momentum, meaning that this pair wasn't able to gain any new upside momentum here. So this double top was giving us kind of a clue that this trend might be coming to an end because we are not able to gain any new upside momentum, even though the price is climbing. Some further details about how to use the momentum indicator is because you can draw lines or treat it like price action, when you see breaks in the trend lines for the momentum indicator, they often occur before the breaks in the price actions. Again, think of it like a ball thrown up in the air. When you throw a ball up in the air, it has upward momentum. But when that ball stops at its zenith there, the momentum has already turned downward because it had to stop the acceleration or the upward acceleration for that pair. And then for that pair to fall, momentum has already been falling downwards for it. It's the same for like a trend or a pair. Look to also take profits on strong divergences. So let's say you're long and you're starting to see a strong divergence where momentum is moving in the opposite direction very sharply to the downside. This should be a good clue to us that the trend is probably coming towards an end. And again, remember, it's a leading indicator for price action. Repeating that again and again and again. So price action often acts as a shadow for it. Taking a look here, we had some really strong trend lines on the momentum indicator and also some strong upward movement in the price action. And when that trend line was broken, and broken pretty convincingly, is when the trend had really come to an end, or at least this up move had come to an end when we started a very serious reversal in this pair, pretty much a complete retracement. Same thing here. When we started this massive 1800 pip down move on the pound and US dollar, the momentum kept finding a certain peak there, a certain trend line there, but when it broke it is really when this thing pretty much found the bottom and came to an end. So this could have been a clue if we were selling short that we may want to look to take profits at this point. Some other simple ways to use momentum. You can use it as a trend following oscillator. So you can traditional methods would be to buy when it bottoms and turns up, or you can sell when it hits a peak and turns down. This is a very oversimplified way to do it. I tend to wait for it to reach extremely high values and then turn down, and then price at that point still is likely to go higher. Remember the ball in the air scenario. The momentum actually has to be moving downward at a decent amount to stop the upward movement on that ball thrown up in the air. Think of a trend very much like the same way. So when we have extremely high values, and then the momentum's turned down and is moving down convincingly at a nice sharp angle, that's usually when I start to look for sell points in that particular uptrend. The other thing is you only want to look for a trade after prices confirm the signal generated by the indicator, meaning the price action must turn as well. Just like RSI, when you hit really high readings, pairs can often continue in that particular direction because that's when it's at its strongest. Some other simple methods is using it as a leading indicator. Market tops are usually identified by rapid price increases and bottoms with rapid price decreases. So because of that, when the market peaks, momentum will often climb sharply and then fall off. That's because the last amount of volume or surge in capital coming into that particular pair to push that and get as much out of that trend as possible is often thrown in. But that also means that the top of momentum, more cases than not, almost every single time is never the top in a particular pair. It's also the same for market bottoms. The bottoms in momentum rarely ever are the bottoms in the actual particular down move. To sum it all up, the momentum indicator I find is very simple in design. It's a leading indicator, so it's one of the few leading indicators out there, which makes it kind of unique. And because you can treat it like price action, it's very easy to kind of translate the information that's coming out of the momentum indicator and how that refers to price action. Very, very powerful. Because price action is often a shadow for momentum, you can use the same methods that you approach price action with on the momentum indicator. AKA, you can draw trend lines, you can pull Fibonacci's on it to see if momentum is ahead or behind the price action, and it's also great for using the momentum to determine reversal points when trend moves, when to take profit when you see the divergence, or when potential reversal points are coming up so that you can trade that reversal. Well, thank you for joining us here for our lesson on the momentum indicator. If you have any questions about this, feel free to email us directly, info@2ndskies.com, or visit our website, www.2ndskies.com.